Joining us on the show right now is Devin Choksi to talk to us about individual buzzers, and Rudra Murthy also joins us to talk to us about the technicals. Devin, let me begin by asking you about the auto sector right now because, of course, a few counters are going to be in focus today. Tata Motors on account of the weak JLR sales that we have seen. You have M&M wherein CLSA has upgraded the stock materially with the target price being above the mark of 3,400 rupees now. And then, of course, Ola Electric wherein it's under the scanner of the Consumer Affairs authorities as well on account of the mounting complaints against the company and the service that they have been providing. What's your view on these counters?
Yeah. Good morning. Well, Tata Motors certainly the passenger vehicle segment, including the domestic portfolio as well as the JLR portfolio. On a month-on-month basis, I think that is not something a great number that we can talk about. But on the other side, the solace or the opportunity is one is finding in the commercial vehicle segment. And commercial vehicles structurally, I think is showing a good amount of growth going forward as well. So I would think that I think once the possibility of the lower interest cost is going to also influence and probably work better for the auto company in general, in companies like Tata Motor in particular. What we are also experiencing, though, despite of smaller numbers or lower numbers in September month for passenger vehicles, but the footfall has been extremely high in the showrooms. So, which is indicating that in subsequent months, that is October to December quarter, we are likely to see the reversal of the downtrend in the passenger vehicle segment, particularly, I think, the large volume play like Tata Motors. So we remain reasonably cautious, but at the same time optimistic about the possibilities for Tata Motors. M&M is a different story altogether. I think all the new vehicles which they are booking them for about 1.5 to 2 years of delivery schedule. And that is amazing because I think up till now, whatever the new vehicle booking that they have done, they have had, I think, a phenomenal run on them. And I think the new one which they have recently launched, it also is, I think, going in that direction. So we like M&M from that perspective that I think it is providing the sustainability in the earning outlooks.
Curious, Devin, morning as to what your outlook is on Nykaa, whether or not you track it. They, of course, came out with their updates, and brokerages believe that, it has been pretty strong growth in the beauty segment. Fashion has been a bit similar to Q1, but there could be a gradual recovery kicking in the second half. What's your take?
Yeah, I think most of the beauty segment players, including the major retailers like Reliance, I think are registering a significantly large amount of footfalls into their showrooms as well. So, from a perspective of looking at the numbers, I think they should be remaining reasonably positive. Do not know immediately how exactly I think it will have the impact on the bottom line or the margin. But one would like to believe that I think given the kind of demand trend that they are experiencing in both the digital format as well as in the physical format of shows, I believe that I think they should be reasonably good on the top line front performance. One will have to wait and see how exactly they fare on the bottom line.
Right. Rudra, hi. What is it that you're making of the kind of volatility that we saw in the Nifty Bank yesterday? I mean, you had the scale up coming in on an Axis and an ICICI Bank, and then that uptick also got sold into.
Definitely, yesterday Bank Nifty was more volatile than any other index. In fact, it was very similar to a mid cap or a small cap. In just few minutes, market went up green on Bank Nifty, and just the late afternoon, we could see another 1,000 point fall from those higher levels within few minutes. So yes, this is highly because of the movement what you see both in crude oil as well as international reasons whatsoever you have. But on chart, technically, I feel after a 6 day of continuous fall, and even after a sell off from FIIs to an extent of on an average 10,000 crore every day for last 6 trading session, I feel at least some amount of respite, at least for short term. This fall has to stop here, give some bounce, and then continue furthermore on the downside. But I will not be on a short camp at current market price, neither on Nifty nor on Bank Nifty. In fact, I'll be very stock specific, and I will look at only long opportunity as a short term trader at current market price. And IT looks very strong to me. Look at stocks like Infosys, TCS, Tech Mahindra, Coforge. They're all doing very good even in last 5-6 days when market is not holding tight. So for me, IT is a sector to go on the long side. don't short anything from banking or from Nifty at current market price. In fact, this is the time to cover your shorts if you have any, and you have to be very stock specific and sector specific. If you want to take any fresh short position, wait for a bounce. And I feel for this short term down move, what you are seeing currently, this has to end somewhere very close to current market price. And at least for short term from here, no selling whatsoever.
Okay, no selling whatsoever. That's the view coming in on these select, indices. But Rudra, what are the individual recommendations coming in?
Picking IT stocks both on the buy side, and number one for me will be Infosys. Yes, the stock even last quarter gave good results, and even technically on chart, this stock is relatively performing far better than any other stock. So for me, Infi from large cap IT will do good. Look at targets of 1975 and then 2000 to come on Infosys. Keep a stop loss of 1920 for this long call. Tech Mahindra also looks very strong to me, and at current market price, it's a good buy. Risk reward is also on the long side. One can enter Tech Mahindra at current market price. Look at targets of 1660 and then 1720 to come. Keep a stop loss of 1590 for this long call. So a buy on Infosys as well as Tech Mahindra.
Clearly an IT bias coming in there. Devin, do you also recommend keeping any bias towards IT on the positive side in this market?
So yeah, we have been positive about IT and the prospects therein, and largely more of a structural change which we are seeing in the IT space, largely because of I think the shift has significantly happened from coding to computing. And over there, I think the use of technology blocks, if I list the majority of the company integrating the use cases, the toolkits, I think our Indian IT companies are providing the platform-based solutions. So from that perspective, I think we remain extremely comfortable about the prospects therein. At the same time, I think engineering R&D business within the IT is giving a good amount of outlook as far as next 2 to 3 years of order book position is concerned. So there too, I think we remain reasonably confident about. In the near term, the stock prices are factoring most of the positives as I see it. I think so. Whether the stock will go up in the hurry, I'm not too sure. Maybe if the market starts stabilizing, I think you will probably see relatively better outlook on the stock price front. Fundamentals, as I said, I think we remain distinctly positive about the outlook of the companies.
Stay on.
Would you look at Ola as one of these opportunities where the company can resurrect itself, and the stock could be a buy perhaps at 90 odd, or if it falls further?
So I think in my understanding, till the time we start seeing, I think the vision for the profitability by the company, I do not think that I'm in a hurry to I think buy this particular company. As of now, at the current market price at which I think they are quoting, they are probably losing somewhere around 24, 25,000 rupees per vehicle. And that's what I think my take would be that I think unless we see a change in that particular equation, wherein they start bringing down the loss, they start probably, I think, registering some amount of profit, then it's worth, I think, buying into this particular stock in the portfolio. Otherwise, till that point of time, wait a while before you enter into the company.
Right. Devin, is this a factor that the market would be worried about, or do you think with the exit poll it is very well in the price?
And by and large, I think market is not expecting BJP to win. I think that is one verdict is very clear. And so I don't think that I think that is going to be a cause for any disappointment. On the contrary, higher amount of vote share, if BJP ends up procuring, that could possibly bring, I think, little better surprise for the market as a whole. But on the other side, I want to put across a viewpoint here that market is basically factoring too many negatives at this point of time, be it on a war front, be it on election front, be it on valuation front. I think on each and every front, I think the market is factoring too many negatives. And that's where probably I think you're seeing the continuous slide in some of the good quality stocks. I would rather like to keep an eye on some of the good quality stocks which are fundamentally strong. They are having reasonably good amount of visibility of earning and are not far too expensive in the in the marketplace when they are quoting. So in my viewpoint, I think it's time probably to start looking at some of the good quality stocks for the portfolio because I think the overall environment is looking quite promising from the corporate trending point of view. Save and except in some cases where the valuations are high, maybe the market will correct on the price and the time front. But otherwise, I think the market looks reasonably okay to buy into, I think at a current levels or maybe I think in a falling price at least in some select stocks on the fundamental basis.
Even let's have some names from you. Any three ideas that you think are worthy of a buy in the current market?
So I think we remain distinctly comfortable buying into some of the metal space. I believe that I think the metal as a commodity is now heading for a structural change. One important aspect out there is the energy prices are remaining under control, and on the side, the demand side scenario remains, I think, absolutely comfortable and upbeat. Uh, Given the fact that I think the energy price are likely to come down because of I think use of renewables, I think from begin with the captive consumption of power, and thereafter I think subsequently the unit consumption comes out of renewables. I believe that I think energy cost coming down is a reality, and that is where probably I think a strong case for going long with metal as a space. Similarly, I believe that I think the consumption space continues to grow, and that is where the lending business comes in. With the cost of lending coming down, or expected to come down, in my viewpoint, I think some of the NBFC companies and corporate banking companies, which are with a large balance sheet, they may be relatively better off from the investment point of view. So we remain distinctly comfortable with the consumption story going around. We remain distinctly comfortable which I think the other area of activity, which is engineering R&D business, which I was talking about in IT. So we like, I think, these particular propositions from the investment point of view.
Okay, so those are some of the pockets where you can be looking for opportunities. But Kunal, wanted your sense regarding a couple of these power sector names. Of course, Tata Power, JSW Energy, on account of that Nomura initiation will be in focus. But Skipper is also something from the entire ecosystem which might be in focus, as Nuvama has initiated coverage and they're quite positive about this one. What will be your pecking order between these three?
So I think Tata Power, NTPC are the ones which would probably be more of the stronger names. In fact, Tata Power, NTPC, both of these stocks, they had recently given a breakout for themselves. So I think Tata Power, came back towards 485, 490 plus levels. From there, the stock has gone through a correction. But I think at 440 odd mark where the stock closed yesterday, looks to be at an attractive territory. NTPC also, I think, closer to that 420, 430 levels. I think looks to be at a very attractive zone. Skipper I don't track, but then looking at the charts on a very recent basis, the stock has been also a lot more stable chart. It still trades above the 50 moving average as well as much comfortably above the long term moving averages. So maybe a buy and up strategy could be a beneficial strategy over here for Skipper. But I think in terms of the charts which I do track, Tata Power and NTPC are the ones which I'll be very bullish on.
Little bit of a slowdown when it comes to Motan sales as well. We of course have been flagging that off. There's been that little bit of a swap in the hierarchy when it comes to the two-wheelers as well, with Hero MotoCorp now slipping to number 2 position in terms of market share. But Tata Motors, the JLR retail sales as well have come in lower by about 3% on year-on-year basis, at about 1.03 lakh units is what they've clocked in this time around. And when it comes to passenger vehicles as well, it's been a bit of a mixed bag, with M&M actually managing to stand ground. Not so quite the case with Tata Motors. They've been two stocks, M&M as well as Tata Motors. That, of course, you highlighted. M&M, of course, there's a CLSA upgrade as well coming in on the stock from the earlier hold to an outperform. They've upped the target price as well to 3,400. So look out for how these stocks actually move out in trade. But yeah, JSW Energy, Tata Power, all these stocks, Anisha as well, were flagging off. These are all going to be in focus this morning. But other than that, they've been wanting to understand what your preference is within private banks, because each time they've made an attempt to come back, the market has not been quite supportive and they've sort of fallen under their own weight, if you will. Do you think it's time to completely switch out of private banks, or because of the FII participation, when it would come back, purely because of their dominance and the weightage on the index, you think some exposure is par for the course?
Well, I think on one side, your demand for money is increasing because of the economic activity which is there. So companies with a sizably large balance sheet are definitely not having much of a problem in expanding the loan book. And that would include likes of HDFC onwards to ICICI to Axis to others, I think, within the portfolio. They would continue to have the expansion, I think, as far as the loan book is concerned. The most interesting part for ICICI Bank and Bajaj Finance would be that I think the retail credit part is, I think, growing very systematically. And that is where these two banks are predominantly, I think, favorably placed, more because of their ability to lend money at a in quicker times, I think, using the fintech platform. They both are, I think, relatively stronger players in this particular space. So, vis-a-vis the corporate lending book, I think we find ourselves more comfortable investing into the companies which are onto the retail side of lending because over there the loan growth I think is reasonably higher, including in Bajaj Finance. Last month AUM growth has been around 29%. So we continue to remain bullish on this particular aspect. Housing finance is another space I think which is where probably you are likely to see the continued growth coming in. Bajaj Housing Finance, so expensively traded, I think whenever it comes down, I think it is a good buy opportunity from an investment point of view. So I guess I think you will have to look at some of these companies. Fortunately, the corporate buys today are available at valuation, which is probably attractive enough to buy into the portfolio. Downside risk may be little less at this point of time.
All right. Meantime, a better sense from you regarding consumption. I know you talked about it as one of those key sectors which you're still positive about. Looking at the updates that we got from GCPL, looks like it's in line with expectation, but DMart clearly had disappointed, perhaps because of that entire quick commerce war. How exactly do you see it panning out for some of these, FMCG companies?
Well, it's going to be very interesting position, I think, which Reliance is taking. On one side, I think they have got on-ground stores. On the other side, they have got digital stores. They have a complete omni-channel presence across. And now they are basically entering to GeoMart into the quick commerce, which is basically registering higher amount of growth. On the other side, I think Reliance Retail is having their own brands, which are giving them a power to generate margins compared to the other players in the marketplace. So it's an end-to-end play which this company is now operating with, which I believe is going to be, I think, a major amount of shakeout is going to get created in the marketplace, among within the quick commerce players as well included. I think that's where probably this company is positioning. They are relatively slow to enter into the market, but once they enter into the market, I think they are the ones I think who basically create the maximum amount of penetration in the market. And that's where I think I would like to remain a little bit more watchful about the entire gameplay, which company like Reliance Retail is probably operating with on the FMCG side. Similarly, the situation I think emerging very strongly from the product portfolio point of perspective for ITC. I think their FMCG play I think is becoming stronger day by day. So I think these two companies probably within the FMCG basket remains relatively more sure bet as far as I think the outlook is concerned on the earning growth side.
All right, Deven, good to have you on board. Thank you for joining in and sharing with us your thoughts. All right, maybe we had the mainland Chinese markets getting off to a roaring start, but remember, the rest of the globe, including the US markets and the rest of Asia, very somber, and that's exactly how we've kicked off today's trade. At least that's what the pre-open rates are indicating. So about 30-odd points down for the Sensex and for the Nifty as well. We are in the red. But let's find out those mid-cap trading calls. Kunal, what's on your radar today?
So I'll go with the sell on Balkrishna Industries. My sense is that the stock has confirmed a breakout on the swing charts, breaking past below the major support points around the 2850, 2860 levels. So keeping 2860 as a stop loss, would suggest a sell with a target of 2720 for Balkrishna Industries.
Right. Rudra, what about your mid-cap ideas?
See, again, picking an IT stock, and for me, KPIT technology looks very, very strong. Look at last 4 or 5 days of trading session, and the stock has always been on the positive, even though overall market was down. So for me, KPIT at current market price is a very good buy. Keep a stop loss of around 1,600 and look at initial targets of 2,000 to come on KPIT technology. So a buy on KPIT for a target of 2,000.
Okay, a buy on KPIT Technologies. That's the idea from Rudra. But let's very quickly.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.